Hello everyone, welcome to the Ichimoku daily analysis for the Aussie dollar US dollar FX for Monday, May the 14th, 2012. Well, a continuation of the trend to the downside today. A large black body candle that's made a lower high and a lower low, with the market closing down towards the low. So the sellers have taken control of this market, and they've shown very strong commitment to taking this market lower. They did test up to around the resistance, previous support at 100.43, and we saw selling come in. We've also seen the market take out the major level at $1 parity, and that's a round number and very important area that we thought may have held as solid support, but the market's blown that away in a very, very bearish manner. So a significant breakout. If this market does rally throughout the day, then obviously the $1 has potential to offer itself as resistance for this market, so we do need to watch that. Below where the market's trading, there isn't any solid support until the market trades down to 98.59, so there could be continued further selling, and this market looks like it's set up for the trend to continue lower with negativity in all timeframes. In terms of the pattern that I highlighted previously, here we have a very strong prior downtrend, congestion with a large flag type pattern, not a copybook pattern. It's fairly large and quite volatile, but we had the bearish breakout, the bearish close down below the lower boundary, and the trend has continued down. Higher likelihood of success of this pattern because it occurred down below the cloud, so the there was a bearish bias in this market to the downside because of that. And with flags, the target for these patterns is the extent of the trend leading into the pattern projected out down from the breakout, and that gives us a target down around 96. Now, how realistic that is, well, previously we didn't think it was very realistic because we had very solid support below, but there is a possibility the market could end up trading down there eventually with some solid support areas down along the way. Now, in terms of the trend channels that I highlighted previously, here we can see the market interacted with the bottom channel on this major trend line that we've drawn down through here between these peaks. Previously we saw the market find support down around there. Today the market's taken out that level, and that just shows how enthusiastic the sellers are in this market at the moment, that area hasn't held. That does suggest that there is a possibility that we could see further downside selling in this market. If the market does rally, however, from here, there is a possibility we could rally all the way up to meet the top of the trend line, and that will hold as a dynamic area of resistance for this market. Now, it's trading roughly around 103 at the moment, but the market will need to develop, and the trend line could possibly be much lower below 103 if the market does rally. But there aren't any signs that we are going to see a rally in the near future that will rally anywhere near up to 102, 103. In terms of the Fibonacci extension, because we had this very long leg of this downswing, we had a series of the market making a series of lower highs and lower lows, the retracement, and then a continuation of the trend to the downside. We have some Fibonacci levels where this market could possibly trade to, and if we just look here, we have the 50% level down at 99.16, then the 61.8% level down to 98.63, and the 100% level down at 96.88, and that 96.88 is getting fairly close to where our target is with that pattern that I've highlighted. So there's some of the levels that we should be watching for the Fibonacci extension of this prior swing here. In terms of the Fibonacci ratio, what I like to do is just look at the prior swing in terms of the ratios, and the swing here is from 100.13 up to 101.45, and we look at the possible retracement or extensions there, and the extension at the moment is traded through the 100% obviously, and the next level where we could find potential support is at the 161.8%, which is at 99.31.5, or at the 261.8%, which is down at 97.99. So there's some important levels for this market. But in terms of Ichimoku, we have a bearish market in all three time frames, and that seems to be the theme in most financial markets at the moment. We've seen the equities market, gold, and now the Aussie dollar, all trading below the cloud, below the Kumo, which is the cloud, below the Kijun Sen and the Tenkan Sen, which are the green line, the pink line and the green line here, and the checkout span is below the corresponding price action. So we're bearish in the long-term, medium-term and fast-term timeframes, and the checkout span is confirming all of that negativity that we're seeing in the market. So there is a possibility the market will be trading to lower levels. In terms of support and resistance, as I've mentioned, there isn't any solid support until the market trades down to 98.59. So that will be an important area to watch if we do see continued bearishness in this market over the next day or two. And to the upside, obviously the round number $1, and just below, just above there to the 100.43 level are very important levels.